All right, let's get into it. Today, we're diving deep into what is basically the nerve center of any business, its accounting system. And trust me, it's not just about crunching numbers. It's really about control, about insight, and, the very foundation of trust in a company. So let me ask you this. What could a small-time snack bar possibly have in common with a massive multi-million-dollar corporate scandal? It sounds like a trick question, right? But believe it or not, the answer is exactly the same for both. It all comes down to the quality of their data. One is just trying to get through the day. The other is facing a total legal collapse. And it all hinges on how they manage their financial info. To really get what I mean, we've got to look at the old way of doing things, which was dominated by this huge problem, data silos. Just imagine every single department in a company having its own private library. And get this, no one is sharing any of the books. That, in a nutshell, is a data silo. So on one side, you have that old approach, these siloed systems, where the sales team has its data, accounting has its data, and absolutely nothing talks to each other. It's a total mess. On the other hand, the goal is what we call an ERP system, where a single shared database gives real-time data to everyone. And that's really the core conflict we're going to unpack today. Okay, so let's meet our snack bar company, Fitter Snacker. This right here is their income statement. Now on the surface, everything looks great. Revenues, expenses, a nice net income. But here's the dirty little secret. These numbers are basically a mirage. They're built on a shaky foundation of outdated, inconsistent data that's been pulled from all those different, separate systems. It's a clean-looking report that's hiding a complete mess. So how does this chaos actually play out in real life? Well, check out this manual credit check process. A salesperson takes an order and has to literally pick up the phone and call accounting. Then, someone in accounting has to go dig through their separate system, which, by the way, might not even show a payment that just came in 5 minutes ago. The result? A big decision gets made based on old information, potentially costing the company thousands. It's slow, it's a pain, and frankly, it's really risky. And this is where our hero comes into the story, the Enterprise Resource Planning System, or ERP. It is designed from the ground up to be the one single source of truth for the entire company. So what exactly is an ERP? Well, think of it as the core software that pulls together and coordinates information from every single part of the business. The key ideas here are that common database and shared reporting tools. It's like the central nervous system connecting everything from sales to HR to finance. And this is the real aha moment of ERP. See that central database right in the middle? Every module, sales, materials, accounting, is reading from and writing to that same database. So when sales makes a sale, accounting sees it instantly. When a payment comes in, a customer's credit limit is updated in real time for the sales team. No more phone calls, no more old data. So the whole thing boils down to this golden rule. Data is entered once. Just once. A sales order, a new hire, a vendor invoice. You put it in one time, and it's instantly available to everyone who needs it. This one simple rule dramatically, and I mean dramatically, reduces errors, because the most common mistake is just someone typing the same thing into a bunch of different systems. All right, with that foundation laid, let's see exactly how an ERP system solves those nasty accounting headaches we saw back at Fitter Snacker. Remember Fitter's painful manual credit check? Well, this is the ERP solution. You can set up dynamic checks, automatic blocks, risk categories, the whole shebang. The system handles it all instantly using real-time data from the entire company. The problem is just, poof, gone. And it goes even deeper. Think about figuring out if a product is even profitable. Without an integrated system, Fitter Snacker was just guessing at the true cost of their snack bars. But with an ERP, you get real-time data on materials, labor, overhead, everything. Suddenly, you know the exact cost of every single bar you make, which lets you make way smarter decisions about pricing and promotions. Now, let's raise the stakes a lot. We've been talking about business efficiency, but in the early 2000s, the conversation shifted in a huge way to corporate accountability. And that brings us to the Sarbanes-Oxley Act. So back in 2001, the energy giant Enron collapsed in one of the biggest accounting fraud scandals in history. It was a massive deal. In response, the U.S. Congress passed the Sarbanes-Oxley Act, or SOX, the very next year. This law completely changed the game, forcing companies to prove, not just say, but prove that they have internal controls over all their financial data. And SOX had teeth, real teeth. Now the top dogs, the CEO and the CFO, have to personally sign off on the financial reports. You can't just say, "Oh, I didn't know." And the penalties for fraud became incredibly severe. We're talking multi-million-dollar fines and up to 20 years in prison. All of a sudden, having a messy, unintegrated system wasn't just inefficient anymore, it was a massive legal liability. And so ERP systems, with all their built-in controls, became the essential tool for compliance. It really transformed accounting from just simple bookkeeping into a source of verifiable, auditable insight. Okay, so let's see this in action. Imagine you're an auditor and you're looking at a company's general ledger in their ERP system. You see this line, raw material consumption for $8,810. Under Sarbanes-Oxley, you can't just nod and accept that number. You have to ask, what is that number? Where did it actually come from? Well, in an ERP system, you just double-click. This is that famous drill down capability. The system immediately shows you the individual transactions that make up that total. So here we see two of them, one for $8,800 and another for just $10. Okay, we're getting warmer. Drill down one more time and you get all the way to the source document. The system lets an auditor trace that high-level number all the way down to the original transaction. In this case, 50 pounds of oats being taken from inventory by the R&D department. That is financial transparency. That is control. And the control features just keep going. You've got archiving, which means data can't just be deleted, it has to be stored permanently. You have user authorizations, making sure people can only do the specific tasks required for their job. And you have change records, which create a perfect audit trail, tracking who changed what and exactly when they changed it. You know, this quote from a CIO of a major company just nails it. After you talk about efficiency and integration, the ultimate reason for using a modern ERP system, especially after Sarbanes-Oxley, comes down to one single powerful word: control. Which brings us to a final thought for you to chew on. Having this incredible, granular level of control is obviously empowering. But as we move into this new world of big data and AI, does this kind of rigid, structured control also create new challenges? You know, how do today's companies balance that need for control with the flexibility they need to innovate? That's the big question, isn't it? Thanks for joining me.